Okay, we have Rajesh Bhatia now joining us. He's the Managing Director of ITI Long Short Fund. He's Chief Investment Officer as well there. Rajesh, hi, good morning. Thanks a lot for joining us. Very strong outperformance for Indian market, Rajesh. What's your view? What's driving it? Yesterday, for example, the market saw that massive recovery led by the Bank Nifty. Your views.
So India is really seeming to be a great house in a really bad neighborhood. I think if you look at across the world, there is concerns of a sharp slowdown, whether it is China, Europe, or even the United States. And given the inflation number that the US kind of saw, I think there is concern that you would need to probably trigger a recession to bring that inflation down. Given all of the context that is happening in the globe, when you look at India, I think when we speak to companies at a bottom-up level, there is extreme bullishness. Maybe it's the post-COVID reopening confidence that is there, which is buoying up demand. Definitely at the premium end, there is strong demand. Maybe, it is a factor of India's momentum being strong, given the context of various measures that the government took over the last few years. The fact that, our profits to GDP, while it has bumped up in a year or two, has been at a 15-year low. The cleaning up of corporate balance sheets, bank balance sheets, all of them probably is coming to fruition. But there is definitely a lot of optimism as far as India is concerned. So it is a case of a good house in a bad neighborhood. And of course, that's why India is getting a lot of attention.
Okay, good house in a bad neighborhood, right? I like that. Wanted to talk about some themes, Rajesh. Premiumization is a big theme across the board that we're seeing, right? Especially in FMCG, in autos. Is this a theme that you'd like to play? And if yes, any specific stocks that you're looking at here?
Oh, certainly. I think premiumization is probably a structural theme. And in fact, if you can find a stock which is a pure play on premiumization, I think the growth rates will be relatively more attractive to the category that you're playing in. So definitely, I think these type of stocks would make a good portfolio over the next 5 or 10 years. I think India is witnessing what we would call a K-shaped recovery. There is surprisingly extremely strong demand at the higher end. Whether you talk to, this is across sectors, whether you talk to real estate companies, garment companies, automobile companies, all across. I can't think of any segment that is not telling us that the premium end is growing at a faster rate. Having said that, at the same time, the lower end is struggling. And therefore, this K-shaped recovery is really, that is happening and that we are witnessing today. I think you could find any, whether it is automobile, if you can find a pure play, premiumization play, I won't take names, but I think it's obvious which are the premiumization pure play in the automobile sector, or let's say, I would say even in the jewelry sector, or let's say the garment sector. All of these names are obvious, but each of these probably seem like secular growth stories to play over the next 3 to 5 years. I don't think the valuations are that compelling at this moment, but that's also the case for the market. I think the market is also priced at 19 or 20 times financial year 24, but I think this theme certainly has multi-year legs.
Theme, premiumization across sectors, absolutely. We've heard from more than one corporate that this is exactly what is going on. Rajesh, let's talk about what you don't like. That's always an interesting conversation. One of the areas we've spoken about in the past as well, and I think you've put on positions there, is diagnostic companies. We've had a bunch of recent, I think Credit Suisse came out with a report, initiated coverage, much lower levels, etc. Any views there on diagnostic companies, and what else in the not like list?
So I won't confirm to you whether we are still short the sector, but definitely I think if you look at the diagnostic profitability, 18 or 20% PAT margins, that is probably one of the highest margins that you would see in the corporate sector in India. And the ease of entry into this business. My sense is that whether it is digital players which are accelerating growth in this segment, or even credible players, let's say like Tata 1mg, they are definitely not allowing these players to increase prices. If ever reduce prices, definitely those realizations are not moving up. In fact, they have not been moving up for more than 5 or 6 years. And I am told that the industry has now started to offer discounts. I'm talking about the incumbent players. And therefore, there is some pressure on realizations. At the same time, I think the cost structures of these companies will have to go up as they spend more on sales and marketing and other initiatives. So my sense is that as you move forward, this sector is certainly something that could see pressures, at least in the short term, 2 or 3 years. And therefore, I think it is certainly an area which could be under pressure. Among the other things, look, in every market, as much as stocks go up, there are sectors that are going to, come down, or stocks that are going to come down. I think, let us say, I can point out to pockets of weaknesses. The oil marketing companies certainly comes to mind, given the government's reluctance to increase petrol and diesel prices, given inflationary concerns, has meant that marketing margins for these OMC companies has been in a severe deficit. Some people estimate the annual deficit of this, which is losses for petrol, diesel, LPG, could be as high as 2 to 2.5 lakh crores, or at least 1.5 to 2 lakh crores. That's a huge deficit that has to be kind of borne. And given government finances, also, it is unclear to the market as to how these companies will be compensated. So again, that's an area of weakness. And like we pointed out, a K-shaped recovery doesn't necessarily mean very good things for companies which are catering to the lower end of these segments. Yeah.
All right, Rajesh, we got it. Thanks a lot for joining us. Have a good day. We need to take a break. Once we come back, we'll shift focus on the market technicals. Sudarshan Sukhani and Mitesh Thakkar will be joining us.